Hey everyone, it's Mike from Orderflows here, and welcome back to my channel. I'm glad you could join me for today's video, where I'm going to be talking about how to read the order flow. What do all these numbers mean? Okay, and this is a order flow footprint chart, right? And it shows you the quantity traded on the bid and the quantity traded on the offer at price. Now, this differs from a DOM, right? If most people automatically assume that a DOM is order flow because it's the flow of orders going in and sometimes trading or not trading, being pulled out of the market. But let me ask you this. What do you think is more important as a trader? To see people's actual commitment to the market via trades that they've done, or the orders that they're putting in away from the market? Okay. For me, I believe that the volume that actually trades is the most important. It's the most recent information of what is taking place in the market. All right. So before I jump in, if you enjoy learning from my videos, don't forget to subscribe and click the notification bell so you don't miss any new uploads. And if you find today's video helpful, hit that like button for me and leave a comment sharing your biggest takeaway. All right, I love hearing your feedback. So let's go ahead and get started with today's topic. All right, so how to read the order flow for trading. Okay, so if you're looking at a DOM, right, there's prices on the bid, there's prices on the offer, right? And if you're looking at a footprint chart, that there's actual trades taking place, or sometimes there's no trades taking place at price. Sometimes price can skip, trading can skip one price level if the market's moving pretty fast. Okay, so I'm going to slide this DOM off my chart here, because really what I'm focusing on when I'm reading the order flow is the volume that was traded on the bid versus the volume traded on the offer, right? Let me put the DOM back in, right? Markets trade in a two-way auction. There's a bid and there's an offer. And you need to take it a step further, right? Because understanding order flow, right, the two-way auction is, yes, you have a bid, yes, you have an offer, okay? But for a trade to take place, someone needs to be aggressive. Someone needs to cross that bid-offer line. So, for example, I'm going to talk about gold today. So you can see here it's 2029.6 offered at 2029.8. Last trade was 2029.7. You have people that are bidding 9.6, people that are offering it at 9.8. For a trade to take place, someone on the bid side has to go in and lift the offer, or someone on the offer side has to go down and hit the bid. Now, people that are working offers, these are called passive traders, passive sellers. People that are working bids are passive buyers. Okay, so you have aggressive traders and you have passive traders. Passive traders are the ones that are waiting for the market to come to them, right? Aggressive traders are the traders that want to get into the position or out of the position right now. They are being aggressive. Again, remember, markets won't move unless there's aggressive trading, someone either lifting the offer or hitting the bid. So how do you use that information? Okay, because when you're looking at a DOM, you're seeing the passive offers, the passive sellers up here, they're on the offer, and you see the passive buyers down here. Whereas if you're looking at the footprint, you could actually see how much traded at price. Okay, so for example, right here on this red candle on the edge, I can see when the market was 2029.6 at 2029.7, 16 traded on the bid at 9.6, 18 traded on the offer at 9.7 in this bar. Okay, this is a 1 minute chart. And then it's from there, right? It's from this information that I could have what's called delta. Now, delta is the difference between the aggressive buyers and the aggressive sellers in a bar. So if a bar has positive delta, you can see this bar's got 2, then it's telling me that there was just 2 more aggressive buyers than aggressive sellers in this bar. But again, who are the aggressive traders trading against? They're trading against the passive traders, right? Aggressive buyers buy from passive sellers. Aggressive sellers sell to passive buyers. Again, go back to your DOM. These are all passive sellers. An aggressive buyer would buy the 29.9s, the 30.0s, 30.1s. That's how the market will move higher when the offers get cleared out, right? Aggressive buyers are coming in and lifting this offer, then they lift the next offer and the next offer and the next offer. Aggressive sellers move a market down because there's passive buyers, there's bidders in the market. They're going to sell, the 29.8, the 29.7s, the 29.6. That's how a market moves down when the aggressive sellers clear out the passive buyers. Okay, so now that you understand that there's a difference between the type of trading, there's aggressive trading and there's passive trading. When people are entering orders into the market, right, away from the market, passive sellers or passive buyers, passive sellers, right, if the market is trading 29.9, they want to sell it up here at 30.7, why are they selling? Generally, they have supply they want to get rid of, okay? And what causes a market to go down is not just aggressive selling, but strong offers that soak up all that aggressive buying, okay? And again, let me just show you what I want to talk about here today. Gold, okay? So gold today, we hit our high early around 720, and then we sold off, made new lows at 33.6 right here, all the way down to 25.4, okay? Now, if you're looking at, a bar chart, yeah, you see a lot of red bars, but if you're looking at a footprint chart, there's very strong information that this market can go lower in the order flow, okay? So let's take a look at it. Let's go back here to when we made our high, 720, right? Yeah, so here at 720, we made a high, right? We got negative delta of minus 49, right? Because we hit a high, selling came in, aggressive selling came in. We've got 49 more sellers, aggressive sellers than aggressive buyers. That's what the delta is telling me, okay? You can see it's minus 49. As the market is going up, right, what is happening? The aggressive buyers are present. That's why you see positive delta, 37, 48, 36, 55, 89, 55. This is the delta down here at the bottom. A couple of red bars here with negative delta, minus 28, minus 10. Then 63, 140, 127 going into the new highs. And as you hit that new highs, aggressive selling came in. Now, I'm not saying this market sold off because you hit a high and you got aggressive selling. Okay, but once you hit that high, aggressive sellers are coming into the market, right? Remember, price is essentially an advertising mechanism, right? Price gets to a certain level, traders are going to look, do I want to be a buyer? Do I want to be a seller, right? Traders are deciding they want to be a seller. Market sells off a little bit, starts to rally back up, sells off some more into the new lows. So let's just pause for a second. If you have aggressive buying, moving the market higher, generally, what do you expect to see? You expect to see positive delta, right? Because the aggressive buying is overwhelming the aggressive selling. That's what's causing the delta to be positive, right? If the delta was negative, generally it's going to tell you that there was more aggressive selling and the market is trending down, right? Or starting to move down. That's why you see red bars have negative delta, right? Here, here, here. And green bars have positive delta, right? It's just common sense generally, right? But, markets don't always exhibit common sense. And from the order flow, right, there was a period this morning before, we were already starting to sell off, but before we broke down into these new lows down here, there was a period here. Let me just draw a box around it here. Where's my, it's Control F12 rectangle. Just going to draw it from basically here down into these lows here, okay? Let me just change this opacity here. I really just want the box. I'll just change this to transparent. Okay, so you see this box area here. Market is going down, right? You got red candles. That's what you expect to see, okay? But what's unique about this move lower is you got positive delta, right? 22, 22, 5, 24, 9, 86, 76. And then you break down almost another 10 bucks here from this level, from these new lows. Oftentimes we make a low, we bounce up off of it, right? But here, this is that area right in here, right? And then we broke down from, 33 and a half all the way down into the mid 20s. So about an $8 move. So why do you have, why is this market going down with the positive delta, right? Shouldn't the market be going up with basically overall positive delta, right? Positive 76, positive 86. These are quite strong. That's why they're this blue color. This delta is telling me that the delta is closing. It's sort of at its max delta, its strongest positive delta reading, yet the market is going lower. What the heck does that mean? Well, it means that supply is coming into the market that's absorbing whatever aggressive buying is taking place. I mean, look at this here. Let's make this bigger so you can see 176 on the offer here, right? You had a strong seller, big passive seller that was there to absorb whatever aggressive buying was taking place here. Okay? Because remember, right? Markets move up on aggressive buying. And generally, right, if your market is moving up on aggressive buying, it's going to take out higher and higher levels, right? Price levels. But if there's a big seller in here that is basically absorbing all that aggressive buying, eventually one of two things is going to happen. That seller is going to run out of bullets, or the buyer is going to run out of bullets, right? Either the aggressive seller is going to be like, that's it, I can't sell anymore, I'm out of inventory, or the aggressive buyers are going to be like, they're out of bullets, right? They can't buy anymore. They got no more buying power, okay? So one thing is going to give. And then once that gives, well, who wins? In this case, the people that are working the offers. And you could just see it in here, right? You see this bar, 22 positive delta. Why? It's because up here, right, look at these volumes on the offer. Okay, now 11's not big, but 18.25. This bar, it only trades 100 contracts. This is a 1-minute gold chart. But you can see how the volume on the offer side is much stronger than the volume on the bid side. So there was strong aggressive buying, don't get me wrong, 25, 18, 11, but that is being absorbed by the passive sellers. Okay? So these aggressive buyers, they're sort of running out of money to buy more. Then the market drops just naturally once you remove that buying pressure. Okay, it goes sideways a little bit. Similar thing, look at the volumes, 22, 18. Now here you got 10, 18, 17, but it's just slightly stronger here, the 22 and the 18. Okay, then this one, again, negative delta, minus 17, but still you're seeing some decent volumes on the offer side, 29, 34. And positive delta here, 24. So you got 37, you got 28. Right? Two of your heaviest volumes are on the offer side, just like this bar. Okay, and then the similar thing coming in this red candle, 18, 14. Here your heaviest volume is 14. Okay, this bar is kind of mixed. And then you see, the big seller is finally showing his hand here, 176. So this market is moving down. Okay, so think about it for a second. Okay, and it's hard to see on a dome because what is going on is the market is moving down and the offers, there's a strong passive offers that are also coming down lower. So what do you have? You have a combination of people hitting the bids, clearing those out, but you also have strong offers coming in, helping to push the market down, that anytime there is aggressive buying taking place, it's being absorbed by the offers, okay? And honestly, a lot of times you don't see it because people use icebergs in the market. But on a footprint chart, it's very clear. And if you know that we're coming into the low and you got very strong supply in the market, how do I know it's supply? It's because it's passive sellers, people that are there to absorb whatever aggressive buying is taking place. They don't need to. And again, if you have supply and you're a seller, a big seller, institutional trader, you don't need to come in and clear out all the bids. Let the retail do that. You're there to absorb whatever aggressive buying is taking place, and you just step it lower, step it lower, step it lower, right? You can see down here, 189 even, okay? And all that took place right? Right in here, basically. Okay, just this little area right in here. Transparent. Right preceding that big move down. Now, I'm not saying you'd cover it down here, but you're talking a move from 34, 33, 60. Even after you break this low at 33, there's plenty of time to be getting short here at around the 33 level. Then it quickly breaks down and into the 28 is a 28 to 29 area. Okay, so that's how you can use what you're seeing on the footprint chart right in here. Put the pieces of the puzzle together, right? All you got to be looking at is, hey, you know what? We're going lower on positive delta, right? If we're putting in positive delta, and again, it's not just that you got one bar with positive delta. You're stringing bars together. This is 1, 2, 3, 4, then negative, then positive, then negative, then positive, then positive, positive. Okay, so you're strung together, 4 in here. Well, even if you lose this 5 right in here, although it's a green bar, but 4 plus 1 in here. Okay, as the market is moving down, that should get your attention. Hey, we're going lower on positive delta. Maybe there's some supply creeping into this market that I could take advantage of. All right. So that wraps up today's video on, how to use the volumes in the order flow, especially the delta. So I hope you found these tips helpful for your understanding of order flow. And if you enjoyed this video, be sure to hit the like button and subscribe to my channel so you don't miss any upcoming videos. Thanks for watching, being a part of my community. Your support is appreciated. I'll see you guys on the next video. Bye-bye.